Well, good afternoon, good morning, hello everyone, and welcome to the first part of our two-section session on integrating resilience into the financial system. Really delighted to join UR Asia 2021. My name is Rowan Douglas. I have two hats I'm wearing. My main hat I'm wearing today is as chair of the operating committee of the Insurance Development Forum, and it's great to have my colleague Ekeswe Iron here, who's the Secretary General. I also work for Willis Towers Watson, where I look after the Climate and Resilience Hub. And I must say, it's a particular pleasure to be part of today's sessions for two reasons, actually. The first, or probably, well, at least two. The first is that I was lucky enough to be involved in the very first Understanding Risk section that the World Bank team, led by Francis Ghesquiere, held in Washington, D.C. in 2010. So as we all know, UR is over a decade old now, and it's had such an influence on our field. And actually, last night at home here in London, where I'm speaking, very chilly London morning, by the way, I'd rather be with you in Singapore. I was reviewing some of the videos, and what struck me were two things. One is many of the same characters are still involved, and we don't look any older, do we? And there's a few on this line. The other one is that so many of the themes that were raised a decade ago the themes are the same, but some of the vision and dreams that were described 10 years ago are really becoming real and practical. And that's really why it's so exciting to be chairing this particular session today, because it really is about changing or turning dreams into reality, but also, frankly, building on all the great work that's been done by the UR community and its friends and relations over the last decade. So to bring everybody up to speed, and then I'm going to introduce our incredible lineup. And my thanks particularly to Nicola Ranger from the Centre for Greening Finance and Investment, who pulled today's session together following the kind invitation of Francis a few weeks ago. Many of us have come back recently from Glasgow, from COP26. And I think what struck us all in Glasgow, those of us who were able to attend, was how resilience and adaptation has really, frankly, at long last, risen up the priority list at the COP. So really a partner now of the low carbon and mitigation side of things. And that's happened for many reasons. But we also, I think, particularly the community of Understanding Risk, realize the particular challenges that helping societies to understand and evaluate physical, climate and wider natural hazard risks could create. But certainly, at long last, the momentum in perhaps the wider climate and public policy community has turned to this area, and also a recognition that the complexities are such that the community that's been involved in this area for some time should be properly employed and drafted in to help the world come to grips with these structural challenges. And we were lucky enough a year ago through the Insurance Development Forum to be invited by Mark Carney, who serves as the UN Secretary General's Special Envoy for Climate Action and Finance, to consider how the insurance sector could support COP26. And one area clearly was to support the wider financial system, and indeed the wider community, understand the physical climate risk. And it was really wonderful timing to be asked that a year ago, and perhaps we benefited from the delay of COP, because so many important institutions were wrestling with the same challenge, but had elements to bring, and many of them are here. It allows me to make some introductions. So as I've mentioned, Ekeswe Iron, Secretary General of the IDF. The IDF has really played a significant role over the last 5 years to employ the insurance sector's modeling and related data expertise to the disaster risk financing and wider agenda. So it's great to have Ekosway here. Kamal Kilshaw will be known to many in the UR community, formerly with UNDP, of course, now with the government of India and its National Disaster Risk Management Agency, but also a key leader of the Indian government-led, but with many other governments, Coalition for Disaster Resilient Infrastructure. We have hopefully joining us shortly, once some technology can be sorted out, Carlos Sanchez, who leads the Coalition for Climate Resilient Investment, which is looking to integrate physical climate risks into investment decision making, as well as Nicola, who will be no stranger to many with her role previously at the World Bank, as well as DFID, now FCDO in the UK, but now Deputy Director of the Centre for Greening the Financial System at the University of Oxford. And that group initially, and then augmented by the Global Earthquake Model Foundation, which many of us had been involved with over the last 10 years and was pretty much launched around the time of UR's initiation. We got together following Mark Carney's request and sought to explore how we could fulfill that mission. And over the last year or so, we've been planning how our various organizations could come together with other friends such as TC here in Singapore, who's led similar work in the region over the last decade, to see how we could bring these elements together and actually provide what could only be described as the core reference system for physical climate risk to be used by many, many communities, finance, development, insurance, humanitarian system. And we're very delighted and pleased that it was able to be announced at COP26 as an initiative. And it does build, frankly, on work that's been done before, but sort of gives it a forward gear for climate. And really, if you want a vision of what this is really all about, turn the clock back 3 or 4 years to the UNDRR's Global Assessment Report in 2017, which for the first time provided a standardized global coverage of natural hazard risk at a national level. And we thought that was an absolutely remarkable achievement. And frankly, building on that, and it's fantastic to see Jenti Kirsch from the UNDRR here, because really it's about taking that potential that we saw 3 or 4 years ago and building upon that a reference system for the world with shared metrics. So the initiative was announced at COP26. Its patron is Mark Carney, along with Mami Muzaturi, head of the UNDRR, and on behalf of the IDF, Eric Anderson of Aon, who chairs our and sponsors our modelling work. And really today is an opportunity to share the plans and sort of philosophy of the initiative. And the aim is by COP27, which will be in Sharm el-Sheikh in around about a year's time, for that to be launched as the first operational service to be used by the world community. It's very exciting. For many of us, it's been a 10-year dream to get something like this underway. And what I will say is, before we get into things seriously, that the UR community will be roped in. So if what you hear is of interest, please get in contact with us via the website. But with no further ado, because I know we started a minute or two late, it's my really great pleasure to hand over to Dr. Nicola Ranger, who, along with Professor Jim Hall at the University of Oxford, is playing an absolutely key role in moving this forward in a practical and effective way. So, Nicola, thank you for all your efforts to bring us to this point, and a real pleasure to ask you to introduce the role of GRRI for our audience today. Over to you.
Thank you so much, Rowan, and good afternoon, good morning, everyone. It's great to be here to to tell you more about the Global Resilience Index Initiative. So I'm going to just give a little introduction to the why. So why did we need a Global Resilience Index? And then I'm going to hand over to Professor Jim Hall, who will introduce where we are now, and particularly the work that we did in the run-up to COP. So I would just share my slides. Okay, so to start with, what's the rationale for this? Well, obviously, given that we're at the Understanding Risk Conference, there's no need to explain to you why disaster risk is important. The fact that adaptation and resilience is an incredibly urgent priority, both for the achievement of the SDGs, the Sendai framework, and also the Paris Agreement. So this is absolutely urgent. Now, what we're talking about here is particularly risk within the financial system. So what's the role of the financial system in helping us manage risks as a society? And there are two aspects. So often we think about how do we embed risk into financial decision making to ensure that we're managing risks proactively. So for example, how do we make sure that infrastructure, when it's built, is built in a way that is resilient? And we're going to hear more about that later. But what we're starting to think about now as well is that the financial decisions that are made today are also having a significant impact on the resilience of communities, on the resilience of economies. And so it's absolutely critical that we begin to bring risk into that thinking across the board, both on the private finance side, private sector decision making, but also on private finance. What do I mean here by the horizon is already here? So this refers to a speech that was made by Mark Carney, the former governor of the Bank of England in his time in the governor role. And he talked about the tragedy of the horizon. So the fact that financial institutions right now, because decisions are often made on a short timescale, are not taking into account future risks. Now, as you know, the understanding risk community, we already know that these risks are here. This is a material financial risk right now. So this isn't a tragedy of the horizon. It is actually the horizon is here right now. And so this is a really urgent priority. Now, there's a lot happening across the financial sector to bring risk more into financial decision making. There's a huge amount happening on disclosure, on regulation, supervisory requirements, a lot happening in infrastructure, for example, that we'll hear about later. But the key thing is that we need to bring this risk into decision making because it does lock in. If financial decisions are being made now that are locking in potential risk for the future. Let's take, for example, decisions that are affecting deforestation or affecting patterns of urban development. It's absolutely critical that we bring this risk thinking into that. If you take, for example, infrastructure, so global infrastructure investment at the moment is around 2.7 trillion a year. Now, you compare that to the size of all adaptation finance, which was about 49 billion of tracked adaptation finance in 2019. So at the moment, we're really focusing on the adaptation finance, which is about 1/60th of total infrastructure investment. And this demonstrates why it's absolutely critical to not just think about our adaptation finance, so the formal climate finance, but how do we really bring risk into decision-making systematically across sectors? So what our focus is then on, how do we make sure resilience is integrated into decisions, both in the public and private sector, consistent with a goal to achieve climate resilient development at a societal level? And then this brings us to the Global Resilience Index Initiative. So one of the key problems at the moment is information on risk is not accessible to all. It tends to be most accessible to the richest in society, the biggest institutions, but even for those institutions, our understanding of risk is incomplete and sometimes inconsistent. So the idea of the Global Resilience Index Initiative is to provide that common language of risk. So it's a basic set of risk indicators that will be available to all to help this integration of risk understanding into decision-making at all levels. Rowan talked a little bit about where the GRI has come from, so I won't repeat that. But we're very much founded on what was learned from the UN's GAR 17. That was the first attempt to provide this global understanding of risk, as well as models like GEM, for example, that provide open information. So it's very much of that philosophy. And then this is about bringing together public and private collaborators to advance that knowledge, really bringing in the next generation of understanding of risk, but working collaboratively. So this is an open platform. It's about collaboration. And we're going to hear from some of the institutions that are involved today. And I'll stop there and hand over to Jim.
Great. Good morning, good afternoon, everyone. It's a great pleasure to be here and to follow on from those introductions from Rowan and Nicola. As you've heard, what we're talking about here is responding to this global need to understand climate-related risks and natural hazard risks, understand where vulnerabilities are across the globe, how they're evolving, and to monitor progress globally in terms of adaptation and resilience efforts. And then to be able to dig down deeper in order to inform very practical decisions about allocation of finance, about adaptation and resilience decision-making, about humanitarian efforts. And that's what the Global Resilience Index is seeking to do, to develop this common language of risk, which is well known within the understanding risk community, but actually touches into so many different aspects of society and the economy, in order to develop consistent metrics in an open and shared way, which can be drawn upon across the global community to monitor progress and inform decision-making. The framework of the GRI is based upon a very familiar framework, at least familiar to this community, in terms of the ways in which we go about calculating climate and natural hazard risks, with layers of hazards, some of them conditioned with climate change effects. And this diagram, the bold instances are aspects which already form part of the analytics which has been uploaded to the GRI, and the grayed out ones are ones which are on the work program already to take forwards. So this familiar framework of hazards, exposure and vulnerability, using a wide range of exposure data sets, and then integrating that together to understand losses in a very wide range of extreme events and more chronic events, both directly in terms of direct damage, but also more widely in terms of business interruption and wider economic impacts and systemic risks that can propagate around the world. And the goal of the GRI is to provide an open and flexible framework for that analysis that begins with global analytics, which then provide the starting point, the template for deeper dives into particular countries and subnational jurisdictions for particular purposes. But what we've understood from many experiences around the world is that having that global template really kickstarts the process of what can be very difficult in particular country contexts. And there are many instances of this, and the GRI is bringing them together. This is analytics which my own group did for the World Bank a year or so ago in all of Southeast Asia, looking at climate risks to infrastructure, flooding and cyclone, And as Nicola has said, infrastructure is so important here because it locks in patterns of vulnerability and exposure for the future, and because it's such a focus of global investment, and because it's a mechanism for propagating systemic risks. And so with platforms like this, we can get the big picture of where risks are concentrated, but then we can also dig down right the way down to particular assets to understand probabilities of failure in different climate-related hazards, expected annual damages, and wider economic losses to provide the basis for prioritization. And so in this more detailed analysis in Vietnam, we've looked at risks associated with particular parts of the transport network, economic losses in millions of US dollars per day, because that then enables us to look at a range of possible adaptation options and to see where things are going to be most cost beneficial. And the picture on the right is small here. It's a log scale of benefit cost ratio for adaptation prioritization. Only the things above the red line are cost beneficial there. There are many cost beneficial adaptation interventions, but there are many things which are not cost beneficial. And at Glasgow, we heard about 50-50 mitigation, adaptation, finance. And the thing that keeps me awake at night is the fact that it's so easy to waste money on adaptation. Let's be realistic about that and honest about it. And also to invest in maladaptation. So if we're going to use that 50-50 finance effectively for global benefit and for benefit of people in vulnerable places, it needs to be prioritized incredibly scientifically and vigorously. And what the GRI then does is zooms back up, making the most of these incredible global data sets, which we now have at our disposal from satellites, from global modeling exercises, from AI and machine learning. And so these are some of the results which were demonstrated at Glasgow. This is road exposure across the entire planet, both at present and in future climate change scenarios. And this is another just demonstration of where this is going from physical assets and networks through to supply chains and systemic interruptions. So here we've looked at the effect of Hurricane Ida on Gulf Coast ports in the United States, and have propagated using satellite ship tracking data, the way in which that shock propagated around the world in terms of the supply of commodities, food commodities across the planet. Where we are now is, as Rowan said, we launched at COP26. We've demonstrated a really significant set of results here. Some of them you've just seen now, others are available on the website. The proof of concept is very much there, and we know that this type of analysis is possible. So now we're into the phase of extending the scope to broaden across all of the hazards and impacts that need to be included, and also to develop the data and service platform so that the GRI can be launched with an operational service at COP27. And that was a very quick overview. We're short of time this morning, but I hope that gives you a bit more of a flavor of what's actually under the bonnet here through this incredible collaboration. Thank you.
Thanks. Thanks so much, Jim and Nicola, for giving us that sort of illustrated overview. And there will be time, we're going to have some time for discussion at the end. And members of the audience, I'm sure you have questions, so please use the facility, and hopefully we'll have time to answer some of them. But now we're going to build on that intro with some interventions from the member organizations who've been at the heart of getting us to where we're at. What I'm going to do, I think most of everyone has the list, so I'm not going to intervene in between each just to save time. So we'll start with Ecosway, and then Genti, and then Kamal, Carlos, and competing with John. So I'll introduce Ekosway. I mentioned Ekosway at the beginning, SecGen of the IDF. Must say, Ekosway's perspective particularly interesting because before becoming Secretary General of the IDF, as many will know, she had a leading role in the African Risk Capacity Initiative across Africa, bringing risk modeling and insurance-related protection to a wide range of countries across the region. And before then, had been right at the heart of establishing the Caribbean Catastrophe Risk Insurance Facility. So really, Ekosway has been at the sharp end of the resilience challenge and the way that data can help to overcome that. So really, Ekosway, delighted to have you with us this morning, and I really look forward to hearing your own perspectives on the opportunity we have ahead of us.
Okay, thank you very much, Rowan, and really a pleasure to be able to contribute to the discussions here today at the Understanding Risk Conference. So I'm also conscious of time, so I will just focus on three key messages, reflecting on three key thoughts around this as one of the founding institutions. So the first thought that I would like to just say is that as an institution, the IDF is really proud to have been tasked to be part of the group of institutions helping to drive this agenda. As Rowan had mentioned, this was an initiative that was launched under the support of the auspices of Mark Carney, as well as the IDF Steering Committee Chair, Denis Duverne, to really challenge us to think through the resilience and adaptation and risk and resilience analytics agenda, and how the insurance industry can contribute to that in a constructive way. So I think that the request coming to the IDF and all the partner institutions that are part of this is really a great reflection of how we can bring our risk management and analytics capability to bear. And so it's something that we are certainly proud to be part of. The second key message that I would deliver is that as an institution and across our membership, we're also really looking forward to applying the outputs from the GRI. Professor Jim Hall had just shared the insights, just a sliver of what we expect in terms of outputs. And that for us is going to be incredibly important for our members, but not only our members, but also in terms of some of the projects and programs that as an institution that we have launched. And I will, for example, highlight a recent partnership, which we also launched at COP26 with the vulnerable group of 20 countries, focused again on risk and resilience analytics. And so the outputs from this work, from the Global Resilience Index Initiative, will be invaluable in informing that support and that partnership that we have with those countries. Because for us, it will provide a strategic view, helping to identify priorities and set the scene for more locally country-focused work in terms of adaptation, disaster risk financing, and disaster risk management programs and priorities. Again, emphasizing the points that Professor Jim Hall had made in terms of how can we do resilience and adaptation in the right way and not waste resources. The third and final point that I would like to focus on is that, like most of you, I'm sure that you're acutely aware of the outcomes from COP26. Yes, there were lots of positives, but there were also real challenges that emerged in terms of the shortfalls as it relates to 1.5 reaching our mitigation targets, but also on the adaptation financing end of things. So this work that we have embarked on through the GRI and other endeavors is really critical when we see and when we observe the outcomes of the negotiations and COP26 process. And it is important because this is about contributing to democratizing the availability of risk information and ultimately providing a shared language around risk. This is also about access to information for public good. And for many of those countries and communities that are on the sharp end, as Rowan had mentioned, this is actually quite important in terms of how we define what the future can be. So this is not an academic exercise. It's really quite an important one in terms of its practical applicability. So for me, I just wanted to emphasize those 3 points and just express my appreciation to all the institutions who have been so willing to come around the table to work collaboratively to try to address what is really quite a profound challenge for all of us. So I just want to put that on the table, and again, encourage those of you who are listening in through the Understanding Risk platform to reach out and be part of this endeavor, because we do need a global efforts and everybody pulling in the same direction. So thank you very much, Rowan, and over to others.
Thanks so much, Ekeswe. And yes, we'll pass the ball straight to Jenti Hirsch-Wood, who's head of the Global Risk Analysis and Reporting at UNDRR. Jenti, over to you in Geneva, I think, this morning.
Yes, good morning. Greetings from a very chilly Geneva as well, Rowan. Thank you so much for that introduction. And I just wanted to underscore how delighted UNDRR is that some of the work that grew out of the GAR 2017 report is really now beginning to be core to that development of next step analytics and the next generation of how we can begin to better manage risk in all its dimensions. We really see this collaboration as an essential tool for helping create a link between the public pressure for sustainable development and private sector catalytic action. And we're very happy to see that so much of the UN terminology, but so much of what we've learned from sustainable development over the years is going to be key to that common risk language. I think that's really important to making this work, and that the tool is designed to have both that development of an understanding of financial risk, but also the understanding of how that affects vulnerability and exposure, and how countries can start to make positive decisions about that next generation of sustainable development. We also think that it's really important, though, for catalyzing some of those discussions about how investment can really be actually risk resilient, and that it can really contribute to better managing and ideally preventing the kinds of systemic risks that are derailing our global systems now. And of course, climate change, I think, being one of the most pressing of those. But the other thing that I'd really like to highlight is that we really see this as a positive tool for helping to fill the data gap, where many of the countries who are most impacted by the current increasing global risks are those same countries that often currently have the least access to quality data that can help them make better decisions. And we really see this ability to create a more common risk language, but also a more equitable and accessible set of risk tools that are genuinely global can be really essential to moving this discussion forward. So I just would like to stress, we really see this as a very useful public-private collaboration. And of course, that's one of the reasons why the chief of UNDRR, Mami Mizatori, is also very happy to have recently joined as a patron. And we look forward to collaborating with this great team to make this a success for sustainable development. Thank you.
Thank you. Thank you so much, Jenti, and for the role that you and UNDRR are playing in helping to liaise with all the various UN agencies and other international public institutions on behalf of the GRRI team. So thank you so much for that. I'm going to flick the ball, I think, now to Delhi, if I'm right, Kamal. Fantastic to be working with you after all these years, and to see how this work hopefully supports in so many ways the work of the Coalition for Disaster Resilient Infrastructure. Over to you, Kamal, in Delhi.
Thanks very much, Rowan. Today, like you, I have two hats. I'm Secretary of India's National Disaster Management Authority, and I am also co-chairing the Executive Committee of the Coalition for Disaster Resilient Infrastructure. Really an honor to be part of this partnership on developing Global Resilience Index. It's going to be immensely useful. I have three big messages from here. One is that we really have to take this, the outputs from this to foster national level policy dialogues at the upstream level. My dream is that the finance ministers of our member countries, CDRI has 28 countries, when they present their national economic outlook every year, they have a chapter on what is the physical, climate, and disaster risk that they are sitting with and how they intend to manage this. So I think that is where, I will call ourselves successful a few years from now when half the countries have the chapter in their national economic outlook on physical, disaster, and climate risk. That's one thing. The second thing is that the countries are making huge investments in infrastructure. Not just at the asset level, but at the systems level, at the upstream investment decision-making level. Risk information really needs to become mainstream. There's a lot of information asymmetry right now. We need to address this, and we make sure that the information is based on that. The investment is based on that. My third point is that there's a people's perspective of it. You know, this is not just a discussion to be had among the policy wonks. This is also a discussion for the poorest and the most vulnerable, who've never had reliable access to basic services from infrastructure systems. The decision makers are promising that, but they need to promise it in a manner that says that it is not just for a few years, it's going to be forever. We are going to provide you resilient services from infrastructure systems. So it's not just a technical discussion, it's really a people's discussion. Thank you.
Well, Kamal, thanks so much for sharing that both inspiring but very, very practical vision and purpose of what we're all seeking to achieve. And I know that'll resonate strongly with the UR audience. And you mentioned infrastructure, of course, Nate, related to the coalition. So it's a perfect opportunity to flick the ball to Barcelona, I think. We're going around the world today to Carlos Sanchez, a colleague of mine here at Willis Towers Watson, but also Executive Director of the Coalition for Climate Resilient Investment. So over to you, Carlos.
Thank you very much, Ron. Thank you, everyone, and wonderful to be here. I'm going to be brief because I know that we're a little bit pressed with time. So I wanted to focus in reflecting on what actually Kamal has just said, because I think that there are some very crucial points, but also what Jenti and others have reflected on, and that is the wonderful level of true collaboration. It's not just words about the importance of collaborating across initiatives in a very particular space. And as we know, in the resilience space, we are growing, but we are not so many as compared to the mitigation. So it's good that we work as closely together as we are. The second is about the importance about data, of course, as Jenti was highlighting, and it is absolutely crucial, as everyone knows here, to provide a credible, transparent, and robust risk modeling service to the world and to decision making. And that is what at CCRI is absolutely core to our mandate. It is to really start with what we call the physics story. So the science story about exposure, how exposure is going to evolve in critical time horizons for decision making, be it national planning, or be it asset valuation, portfolio construction at the asset level. So that physics story of what exposure, vulnerability is going to be in certain time horizons is absolutely crucial.
Carlos, I think we might have lost you, Carlos. Is it just me, or is it everybody can't hear Carlos?
No, he's frozen.
Yeah. Can you hear me now?
Yeah, sorry, Carlos. We just froze as you said the physics story.
Okay, so let me continue. Apologies because I've been struggling. So if this fails again, feel free to carry on. So I was just moving into the interpretation of the physics story. So once we have that credible, transparent, and robust story of what exposure is going to be in critical time horizons for decision making, is that interpretation, be it for national planning, so understanding how much economic, social, ecosystem value every unit of fiscal capacity is going to protect in a critical time horizon, or be it pure risk adjusted returns, which is something that we also need to look at very carefully. And that's where also in collaboration with many here, we are working on that interpretation. But then at the end of the day, what we want to help is also on key incentive structures that at the end are driving these both systemically and systematically across the globe. And that is how this risk modeling, interpretation, application should be both enforced and rewarded for this to be not anymore about a particular action, but about the whole system applying this. Because what we see within the coalition is that actually today, the tragedy is not that we struggle with analytics to integrate. It's not that we have very few integrating physical climate risk in actual investment decision making, is that oftentimes that action is penalized. And that is penalized because, as we know here, understanding risk may result into an additional incremental capital deployment, but that is not recognized in terms of the quality of the investment, the cost of capital, the reduced operating expenses. So just wanted to emphasize that important element of translation or theory of change up to that systemic and systematic change, and then finalize with something that also was highlighted about the particular needs from vulnerable countries and the particular risk of vulnerable countries, that we need to provide them with the right tools, not only for the assessment, but as critically said, for the management, and that entails capacity understanding for these countries to better understand and manage this risk, so that we don't scare capital, and instead we attract that capital and that investment to those countries. Ron, I think I should stop there in the interest of time, but thank you very much.
Carlos, thank you so much. And you're really reinforcing that point that Nicola made about how we're really seeking to create the right relationship between physical, climate and natural hazard risk and finance and capital in a constructive and positive relationship. Now, just to bring this sort of section on partner and policy perspectives to a close, really thrilled to head to Italy, I think, this morning, and Pavia, and bring in Dr. John Snyder, who, as many in the UR community will know, is Secretary General of the Global Earthquake Model Foundation. Really delighted for three reasons. One, I've been lucky enough to be involved with GEM since its inception, and really it's been the success of GEM as an insurance sector-led public-private initiative, which was one of the key, I think, pieces of evidence which gave Mark Carney and many others the confidence that the GRI, with a similar community around it, had a strong chance of success, because we could show the previous success and ongoing success of GEM. Secondly, of course, while the GRI had a particular momentum at the COP, the climate summit, of course, what people really want is both climate and other natural hazard risks integrated into a single system. So we're delighted that we're going to be able to integrate seismic as well as climate-related risks. And finally, of course, we all know in the UR community that risk is a function of hazard, exposure and vulnerability, and the exposure analysis that GEM has done of the built environment and other exposed assets and communities over the last 10 years is going to be so crucial, we feel, to the success of the GRI. So, John, really thrilled that you can join us this morning and bring this section to a crescendo.
Great, thank you, Rowan. Great to be part of this panel, and very pleased to be able to represent GEM and the interests of GEM together with the Global Resilience Index Initiative. As you have said, you know, GEM has been around, has developed a global collaboration network across public and private sectors, and I think that's really, you know, it's been a great success in being able to bring governments, a wide variety of government organizations, as well as private sector organizations together to work towards a common interest in risk and common solutions. So we see the GRI as a major opportunity to extend also our current risk modeling capability and applications, the collaborations, the capacity building, and so forth that we do, further into risk management and resilience planning. I think we're very good at assessing risk at at a certain level, but I think we'd all probably argue that the next big, the big challenge is bringing that risk information into practical use and better decision making. So this is certainly part of our goal as an organization as well. As you also said, Rowan, GEM has developed a global exposure database and a taxonomy for commercial, residential, and industrial buildings. It's been building over many for now over a decade, and we think we can leverage that in a number of ways. this information is not only useful for earthquakes, of course, it can be used for assessing the physical risk from other natural hazards. So we can use it as a starting point to forecast exposure into the future. We think this is obviously an important thing to couple with, we need to understand how climate will change into the future, but we also need to understand how our exposed assets and population will evolve into the future to be able to model that appropriately. And of course, collaborating with the work that Jim Hall described on infrastructure networks. This is an area we see as an area for future application. So we've developed a number of risk metrics for assessing economic, social, and physical impact of earthquakes, including direct impact in terms of physical damage, casualties, loss of life, and also some indirect impact, such as business interruption and displacement of populations. But into the future, as I mentioned, we need to bring this more into a multi-hazard context, look at systemic risk, and incorporate climate change and other risk metrics into an integrated program. So GEM started out with a single focus on earthquake risk, but we're now part of a much bigger movement to build integrated risk models that are driven by the need for common databases, common modeling methodologies, and analytical tools, as well as common risk metrics that are needed to address the broader mission to achieve our goal for resilience. So thank you very much. Back to you, Rowan.
John, thank you so much for bringing us home. And I'm sure what the audience has picked up is the consistency of the kind of vision and practical objectives amongst the coalition partners who have come together, and indeed the wider community who are supporting. So thanks for that. And just to let everybody know, I think we started on hour for most of us. I guess it was on the hour for Kamal, because I think, Kamal, you operate at a slightly different time zone than the rest of us. So we've got about another 18 minutes. So please, if you have any questions in the audience, please feel free to use the chat feature. It'll come up on my screen, and we'll aim to bring in any questions in the last 5 or 10 minutes. But we're now going to have a couple of perspectives on what's been heard, and also particularly the Asian perspective from two locals, if I can say this, in Singapore, and really thrilled to introduce Dr. Yui Long from the National University of Singapore, and Dr. T.C. Pan from NTU, the Institute of Catastrophe Risk Management. It's a great pleasure personally, because Yui was very early an extended member of the Willis Research Network well over a decade ago, and equally with TC, had the pleasure of working with TC for about a decade, and sit on the ICRM advisory committee. And I can't imagine two better perspectives to give both an academic but also local regional perspective about the opportunities, but also probably the challenges of resilience and modelling in the region. So we'll start, if I may, with Yui, and then we'll head to TC. Over to you, Yui.
Thanks, Rowan. Let me upload, first of all, a few slides for discussion. Yeah. Okay, can you see my screen now?
Not yet, but I'm sure it's on its way. Not quite. Oh, here we go.
Okay, great.
Yeah, there we go.
Okay. Now, thanks again, Rowan. Glad to be a part of this GRI discussion. Now, to bring in the GRI into particularly with focus on flooding, what I would think that we all need to know, particularly the vulnerable V20, not G20. So they need to know, but in particular, what are we expecting in the future, the projected precipitation and temperature, precipitation in particular, of course. Now, having said that, I will have some example later on, and then I will bring up also another important parameters, which is the digital elevation model. When you want to know about it, that we need to know. I will also show something about it too. Okay. Now, my first slide is going to be showing here let me close down the pictures of everybody. Yeah. Okay. Okay. Now, never mind about the top two panels, but more importantly, the bottom panel, in particular, the right bottom. Okay, that indicate the annual maximum daily precipitation in millimeter per day. Now, I indicated also for Jakarta and Ho Chi Minh City, the observation between 86 and 2005, it was about 150 millimeter per day for Jakarta. Now, if you look at the plot, somewhere in the last 30 years of the century, it will go up beyond that for sure. And then one event from the projection is going to be almost like 4 times more than what it is now recorded. Okay, so now the message is that if you have problems already with the current drainage system, flooding all over the places, so forget about the future if you don't do anything at all. Okay, similarly for Ho Chi Minh City, it's not that bad. 300 millimeter has been recorded, but down the road it's going to be almost like 60–70% to be anticipated. Okay, so the message is very clear. Forget about the temperature. Temperature, we all know, is going to be increasing, continuously increasing, and on and on and on. Now, having said that, now it brings me to the second item, which is the DEM, Digital Elevation Model. Now, as we all know that not many countries have very fine resolution of DEM. Obviously, we all operate with the low funding when we got projects, so to speak, and also time also quite limited. So we are being challenged by 2 things. One is funding. The second thing is nothing but the time limitation. Now here, what we're presenting, what we have done in NUS is nothing but coming up with a DEM improvement scheme applied to publicly accessible satellite DEM data. Now, obviously, if funding is not an issue, then you go ahead and buy, like from the AW3D Japan, can be quite expensive, yeah, particularly when you have a large area to be to study. Now, what I'm showing you over here, let me enlarge that a little bit. It's better, yeah. I will tell you why we are starting with NIS. Yeah. Now, just to let you know, we apply this DEM improvement scheme on satellite, what is called the SRTM. Now, we do that, that's free though, that SRTM. Now it's already 30 by 30 meter resolution. Previously, before 2015, outside of US is 90 by 90 meter resolution. So that obviously not good. But even with 30 by 30 meter resolution, question still nevertheless is whether we can improve that much better. All right, so we use the high resolution observe DEM from NIS Metropolitan. There was at that time is 1 by 1 meter resolution. Now, after training, as usual, we use AI, artificial neural network or the convolutional neural network. Now, then we validate on another side in NIS. Now, this is what you see, one part of NIS, the train station somewhere down here. And then this is the reference DEM coming from the NIS Metropolitan. Okay, anyway, this is nothing but the area. Now, what you will see next is nothing but if you directly download the SRTM DEM, that's what you got. It's quite blurred for sure. Okay. Now, applying the scheme, this one over here is convolutional neural network. What you will see is nothing but this. Okay. So certainly it's much more clear than the SRTM directly DEM coming directly from SRTM. Okay. So I kept on using old folks like me. So if you have a cataract, this is before cataract removal and after cataract removal. So there you go. All right. So next thing over here is, now if you use the direct SRTM data and without the improvement, this is what you get to compare with. The bottom one is without improvement. The top one is with improvement somewhere in Singapore. Okay. So the flooding both are at the same condition. 100-year return period, the sea level rise 4 meters above the, the sea level is 4 meters above the mean sea level, and so on and so forth. As you see the bottom one here, directly from SRTM, which is free, okay, you could see almost next to nothing, no flooding at all, okay, because the elevation of the ground, particularly the one of interest is nothing but the road, is going higher up, okay. So that ends my discussion. So make sure before the GRI being considered that we need to know what the index need to know. So we need to know the exact things about what's going to happen to the city under consideration. Thank you so much.
Thank you so much, Yui, and just illustrating yet another critical data set and type that needs to be brought in and integrated into something like the GRI, and just you know, a critical structural data set, but one of many. I'm going to do a couple of a bit of dance now. I'm going to say welcome TC to speak as our final sort of prepared speaker. I've actually got to jump off to join Nicola for the second part of this session, which is starting now. So to moderate things, I'm going to hand over to my colleague Matthew Foote, who is very closely involved with the GRI program. So over to you, TC. I'll say goodbye. Thanks to everyone for joining, and Matt, you can help coordinate and bring things home. So bye-bye for now from me, and over to you, TC.
Thank you, Rowan. Leon, if you can off the screen, I will take over.
Oh, sorry. Yeah, that's right. Yeah. Thank you, sir, so much.
Yeah.
Yeah.
All right. Good morning, afternoon, or evening, everybody. I just have this feeling about, although we kind of started from different part of the world, the program that I'm trying to share with you in a few slides is actually ASEAN levels financial resilience. So it's a ASEAN disaster risk financing and insurance program, phase 2. And what it does is, Carmen was saying earlier, that resilience is more than just analytics. And John was saying that there should be a common database that should be used for different perils, and Professor Hall also said that. So the program actually comes under the care of ACSCC, the Cross-Sectorial Coordinating Committee on Disaster Risk Financing and Insurance. And what we got is a platform which we speak with finance and central bank colleagues on one committee level, and together with the insurance regulators of all ASEAN countries, as well as the Committee on Disaster Management. So we always have the 3 agencies of individual ASEAN countries across the region to speak with us and work with us, with a goal that to implement the DRFI roadmap. The really final points that we try to reach is enhance the financial resilience to disasters through cooperation within country and through the subnational to national to sub-regional, regional scales. So what's been happening then, let me see if we can get the slides going. So it's actually a program that was approved by the 10 ASEAN finance ministers and central bank governors in April 2018. But because of the pandemic, it didn't get started until like middle and late 2020 with the 3 activities ongoing on risk assessment. Then that covers not only earthquake, but also 2 other perils, that typhoons and floods, which are more climate related than earthquake. Then it goes to risk financing advisory, besides capacity building workshops. So one of the first thing, and it's still ongoing, is actually exposure. It's great that Professor Ho has said that we have the hazards, which comes from different natural perils. Then we operate on common exposure database. In this case, we have been working on 7 ASEAN member states, from Cambodia to Vietnam. Eventually, we'll be covered 10, but for now, we have the relatively broad index on financial, social, economic index base at the provincial level of ASEAN member states in one level. In the capital cities, where the large concentration of exposure are located, that we look at very high resolution satellite imagery, and Professor Leong was saying something about that. AI process, which we will benefit from that too. So this is where we are. We're looking at high resolution capital cities exposure to flood, earthquake, and wind, as well as the provincial levels that individual countries can be. And this data exposure itself, together with the insurance information, because we work with the regulators, as well as the disaster loss information, are now co-located on a GP2 platform. They are available to individual ASEAN member states. They are using the data to do the risk financing and insurance options. So together they are able to access them to visualize the hazard, the exposure, the losses, and also the options of risk financing potential strategies. So the whole thing has two goals. One is on individual country, where we work with national disaster management organizations that we hope they can do pre-disaster deployment, and insurance regulator for insurance gap, as well as the national pools. Then, of course, more importantly, we work with the Ministry of Finance and budgetary folks to look at the potential financial needs. And across the ASEAN, while we work with the countries, that we would like it to be consistent in all countries. So our risk view should be consistent, and assessment method should be uniform across all jurisdictions. Then nationally, we work to facilitate understanding of national exposures and risks. And while we're working with the individual countries, they're also working alongside with the neighboring countries. So there is opportunity that we have the chance to work not only on countries, but sub-regional, the Indo-China countries, as well as ASEAN regional countries for risk reduction solution. So that's the program that we've been running for 1.5 years. That's a halfway point. It's a 3 years program that we are looking forward to working with the ASEAN member states. And so exciting to see this GDR is actually following the same process that we would be happy to make use of the taxonomies and methodologies when we speak with the ASEAN member states. Thank you. I'm going to pass the floor back to the chairman. Yes.
Thanks very much. And as Rowan said, my name's Matt Foote. Just briefly to say that I've been very fortunate to have been involved with the GRI from its inception as a member of the technical task force. So I've seen how it's evolved very rapidly over the last 12 to 18 months from a concept to reality around the construction and development of common data standards and models to support improved resilience globally. And from this session, I think it's very clear to see that there's a broad range of stakeholders, there's a broad range of end user requirements that have to be adequately designed into the program at the starting point. And it's a pleasure to see the contributions and comments from everybody on this panel who have all been instrumental in getting the GRI to this point. I think there's work to be done, and I know from what Genti and John particularly have said, and also obviously Carlos from the CCRI and Kamal from the CDRI, their perspectives are very critical to making sure that the success of the GRI is realised by making sure that the data and the models are fit for the purpose intended, which is to improve collective understanding of risk and also then to guide improved resilience across the globe from physical climate risk. So I think just to say here that we are running out of time, I just wanted to offer the panel some last comments before we close this session based on what's been discussed. I believe there aren't any particular questions coming from the audience at this point, so we have a couple of minutes to discuss just briefly between us, and I just welcome questions from those on the panel as a final comment.
Matt, I'm happy to come into.
Thank you, Carlos. Yes, please.
to add a comment or two, but it's not going to be anything radically new. There is a lot of work. It is really encouraging what we are discussing here in terms of the collaboration levels, the practicality, and the granularity, and that this continued effort is entering new dimensions of challenges, and it's important that we remain working as closely together as we are with the crucial actors that are around this table, that we owe each of them so very much, but that we should not relax, because there is an urgency to really develop this kind of risk modeling capability, but as everyone is saying, be developing the translation function for that risk modeling capability that is equally important to that. So really encouraged from the CCRI perspective, really just looking forward to continuing this learning experience with all of you and this collaborative experience. And yes, so and maybe with a final plug to say, anyone interested in CCRI, really just please let us know. We have a website, and we are always open doors to bring in new actors. But back to you, Matt, or fellow panelists.
Thank you, Carlos. I agree entirely. And I don't know if Genty or John or anybody else on the panel have any final points to make.
Yeah, maybe I would just come in very briefly, just to also highlight the point of sustainability and open access. And I do think that as we move forward, it's really important, first of all, that we allow, we need to build systems while recognizing intellectual property and recognizing, the realities of some of the more sophisticated bespoke tools. I think it's really essential that the core of this and that base layers that allow for that decreasing of data disparity across countries be really open source, and also that it be really sustainable and put forward as a longer term digital public good, because without that, it would be a tragedy if this initiative became another expanded pilot. We really need it to be a driving force for that next generation of decision-making tools that can underpin transformative development. So just a final thought from my side. Thank you.
Maybe could add to that I was going to make the same comment, Genty, but I'd also like to add, for GEM, the development of open models and data and tools for assessing risk have been fundamental to our program and to the and getting partnerships across the world, and being able to help with building capacity in developing countries, as well as in developed countries and in public and private sectors. It's not just about bringing information and models and tools to developing countries. It's in some cases equally important to provide the uniform tools and data sets and so forth that others, that everyone can use.
Thank you, John. I
So
think
I'd like
we'll have to
stand with that.
Okay, John. Thank you. I think we have to stop this session now, but thank you very much, everybody, for a very enlightening panel. Thank you.